Okay, we all know that if you can't pay cash up front, you've got to get a mortgage to buy a house. But how does it all work in the end if you haven't gone through this process before? VISBL is here to answer your questions with real info. What is the rate? Start with the fundamentals. If you're buying a loan, you're very simply paying for money that you'll slowly pay back, plus a little more to make it worth the lender's while. That extra money is the interest on the loan, and it's shown as a percentage rate. What are loan fees, and should I be aware of them? Yes. Loans usually come with fees such as origination fees, application fees, other fees related to the processing of the loan. It's important to understand these fees as they add to the cost of the loan. Luckily, VISBL puts the fees out there for you to help get a complete picture. How do I apply? Once you shop around and find the right rate, you'll need to fill out an application to be approved for a loan. That also includes providing information about your income, employment, credit history, and details about the purpose of the loan. The lender uses the extra info to evaluate your eligibility and your risk, which sets the terms of the loan. What happens after I apply for a loan? Well, after you apply, the loan officer will review all the details you provided and then lock in the interest rate and terms, repayment schedule, and any fees. Once your loan is approved, the lender will provide you with a loan agreement outlining the terms and conditions. You'll need to review and sign this agreement. Once signed, the lender will disperse the funds where they need to go, through an escrow account, for example. How do I repay the loan? A house is likely the biggest thing you'll ever pay for, but don't get daunted. Your repayment schedule is set out in the terms of the loan. Your monthly payment is made up of the money going to the principal, the amount originally borrowed, and the money that goes to interests, the cost of borrowing. This amount shifts over time in what's called the amortization of the loan. It all comes down to getting your bearings from the outset. Shop with VISBL to make an informed mortgage decision sooner.